Hi, I'm Max Keiser, and welcome to the Keiser Report. You know, J.P. Morgan is so desperate to keep the price of silver down. They defrosted Osama bin Laden and threw him into the ocean just to deflect attention from the fact that the silver price is rising above J.P. Morgan's stock price. That's the key threshold. Once it gets above J.P. Morgan's stock price, it's hello, Enron-style collapse, Jamie Dimon's out in the street doing nothing. Yeah, that's the way it all goes in the wacky world of global finance, where America's animal spirits and lust for the kill, hate of Osama has gotten the testosterone level so high that the sperm banks are overflowing over there. Oh, yeah, get those Dixie cups ready. Okay, Stacey Herbert, what do you have for me?
Well, Max, actually, you mentioned Osama bin Laden. He should have listened to Charlie Munger because, of course, Berkshire Hathaway had their shareholder meeting last weekend. Munger, buy gold if you think your country is going to kill you.
Good idea, Charlie Munger. Well, this is a tacit approval, a recognition of the fact that the relationship between gold and total countrywide malfeasance. Munger is putting now price on the fact that as the U.S. commits suicide, price of gold should go higher.
Well, also, you have to define kill. I mean, you could kill somebody physically and dump their body in the ocean, or you could kill them financially and economically and kill their future. And that is what one could argue the Fed and the Treasury are doing.
Yeah, that's exactly what they're doing, and exactly why gold is going higher. They're committing euthanasia of America as conducted by the oligopolists.
Also, following on bin Laden, the dollar rallied and silver sank sharply on his reported death. Here comes the headline, however. Citi comes pouring cold water. The short-lived bin Laden bounce. So they're referring to the short, sharp rise in the dollar following the death. But then they go on, Max. However, negative sentiment for the U.S. dollar has accelerated in recent weeks, and short U.S. dollar positioning remains high. This event serves as a reminder that the U.S. dollar is increasingly susceptible to short squeezes, but the relatively quick reversal also indicates that some pretty committed U.S. dollar sellers remain in place.
Yeah, of course. Bear markets are punctuated with short, swift bear market rallies, and bull markets are punctuated with short, swift declines, like we're seeing in silver. Silver made a quick 10% move down. Now it's heading toward 500. The dollar made a quick bounce up, a dead cat bounce, if you will, but its primary trend is down into the gutter. It's going to zero. A play on silver is a play to put the U.S. dollar where Osama is living at the bottom of the ocean after they defrosted him because America wants Obama again because they don't want to compete anymore. They just want a Politburo-style, non-competitive schmecka economy run by psychos.
Max, what's a schmecka?
I just made that up. It's a concatenation of schmuck and hieroglyphics. Just rewind the tape and play that again forward, and you'll know exactly what I'm saying.
So, Max, let's move into the other world of financial terrorism. As I said, the Berkshire Hathaway meeting was this weekend, and we interviewed Janet Tabacoli recently about those who wield these weapons of mass destruction, financial destruction, and we referred to David Sokol, who was the heir apparent to Warren Buffett, and then he was outed after insider trading. His lawyer said, "It is alarming that Mr. Buffett would be advised to so completely flip-flop and resort to transparent scapegoatism. Mr. Sokol would have expected to be treated fairly. That would have been in Berkshire's interest."
You know, I think it's interesting because, this was the first mainstream global media show that started talking about Warren Buffett and the fact that he was overrated. And if you took away the fraud, the malfeasance, the insider trading, the market manipulation from his performance, he'd be no better than an S&P index fund. And now this is finally coming out at the end of his career. It's a shame that he and Charlie Munger, his friend, are not going to end their career on a more positive note. I'd like to see the video footage of Charlie Munger dressed up like the Gimp from that movie Pulp Fiction, where he comes out of the floor in a leather head-to-toe suit and a chain, and then he performs ungodly acts of financial carnage in front of Warren and the shareholders. Now that would be a video worth watching.
So, well, speaking of shady dealings, let's move to the next headline, Max. Shady dealings helped Gaddafi build fortune and regime. Now, the thing that's so interesting about this, of course, we all knew this, right? Where did Gaddafi get his $120 billion? Well, of course, course, he got it from Western corporations and Western politicians and Western governments. But here's the quote, and it's referring to all these Western corporations who plead innocence, that they were so shocked that to be asked to pay all these kickbacks. The episode and others like it, the officials said, reflect a Libyan culture rife with corruption, kickbacks, strong-arm tactics, and political patronage since the United States reopened trade with Colonel Gaddafi's government in 2004. As American and international oil companies, telecom firms, and contractors moved into the Libyan market, they discovered that Colonel Gaddafi or his loyalists often sought to extract millions of dollars in signing bonuses and consultancy contracts, or insisted that the strongman's sons get a piece of the action through shotgun partnerships.
Yeah, Gaddafi is inheriting the mantle from Osama bin Laden. You know, because American television is so infused with commercials that they can't have the time to focus on two bad guys at once. They can only have one bad guy at a time. So since Gaddafi is the bad guy du jour, they killed off Osama. They threw him in the water after they defrosted him. And this is now their focus going forward, is the new bad guy.
More importantly, Max, the important thing about this, what I'm trying to bring to your attention here, is they're saying that they're shocked that this is such unique to Libyan culture, the strong-arm tactics, these consultancy fees for those connected to the Gaddafi regime, the fact that the son has to be put onto boards of directors. Think of the Bush family, think of the Clinton family, think of the Kennedy family. How many of these people are forced onto boards of directors? Look at the Carlyle Group. Who's on their boards of directors? Do we not have the same situation in our own countries? Forget about Gaddafi and bin Laden. Those guys are, dead or fake.
I guess I'm confused because I don't really separate Gaddafi and the Libyan, what we know about Libya, as any different than what we see in America. I mean, they're part of the same octopus of corrupt Wall Street and General Electric. I mean, there's a perfect example of it. They have their terrorist, Jeff Immelt, is now inside the White House whispering into Obama's ear all day long. So this is just a complete merging of terrorism and the state. It goes beyond fascism. Fascism was just corporations merged with the state. This is terrorism merged with the state. State-sanctioned terrorism.
These companies claim they were forced to pay signing bonuses and consultancy contracts. So let's look at this next act of financial terrorism that we've been watching across the European Union. Banks accused of talking up Greek debt fears. So this comes from Klaus Regling, the head of Europe's Rescue Fund, the European Financial Stability Facility, and he told a German newspaper that he believes banks are encouraging talk of a possible Greek debt restructuring because they are hoping to earn large fees.
Well, first of all, Terence Quick, who hosts the Contra TV in Greece, in Athens, gave me this tie. So that's the first thing I want to say about Greece. The second thing I want to say is, as we've been talking about on this show for months, the Greek debt situation is a plaything of the fee-seeking banks on Wall Street. There is no onerous debt. There are only assets and fees to rape and pillage and take from the Greek people. We just came back from Athens. I played to a standing room-only house once again with the Hang the Bankers tour. And people in Greece still think that there's some logic behind the financial rape of their country. They don't understand us just rapists.
So the quote from Klaus Regling is that he said, in the 1980s and 1990s, banks cashed in very high fees for the restructuring of sovereign debt in Latin America and Asia. They would like to do that again in Europe. And apparently Jean-Claude Trichet, according to this article, is also on board with this. He believes this, and he's warned sovereign nations that this is happening, that these banks just want a stupid fee. And they'll throw entire nations under the bus. They've thrown Ireland under the bus. They've thrown Portugal. They've attacked Greece. They're attacking all these countries just for a stupid little fee. And we've reported this over and over and over again. $5 trillion taken from the U.S. economy just for $50 billion in bonuses.
Well, the opposite of too big to fail is too small to succeed. And in the case of Greece, it's only a $300 billion economy. So it's not even as big as Walmart, one U.S. company. It's just the right size to rape and pillage by bankers. It's too small to succeed, so it has to be taken out.
But you can leverage that through insurance products that you can make trillions on destroying a small economy like Greece. You see this again in the EU from this next headline. EU probes banks over debt insurance abuses. Europe has launched antitrust probes into giant U.S. and European banks whose fine slicing of the insurance market was blamed by debt-ridden Eurozone states for pushing them into bailouts. So the investigation is focusing on credit default swaps, CDSs.
I love the term fine slicing, another synonym for fraud and lying. You know, that's what ultimately could stop the scandals. They run out of synonyms. Fine slicing the insurance products. That's a, oh.
It was originally designed as a product to ensure those who had holdings or investments in these bonds, including the nation. But of course, it became used as a weapon.
Yeah, that's right. We've known this for quite some time. But the regulators are in the pocket of the banks, so don't look for them to regulate. And the people are underwater on their houses, and they can't be bothered.
So in a two-pronged investigation, the European Commission said it will examine whether 16 investment banks and Markit, M-A-R-K-I-T, the leading provider of credit default swap market information, colluded or abused a dominant position to control financial information.
This is an update on Goebbels' propaganda model. Remember, if you tell a lie big enough, people believe it. In today's financial terrorism landscape with J.P. Morgan and Goldman Sachs, if you create an index, you see, then people will believe it. If you take all the fraudulent securities and you create an index that tracks the fraudulent securities, then the index magically makes the fraud look legitimate. This is, I love the fraud here. It's so tasty, it's so delicious, because it's collapsing and driving precious metal prices higher.
But the banks involved, the 16 banks involved in this alleged fraud, they're investigating this potential fraud. The 16 banks you will recognize as being the biggest recipients of bailout funds and state aid across the entire world. J.P. Morgan, Bank of America, Barclays, BNP Paribas, Citigroup, Commerzbank, Credit Suisse First Boston, Deutsche Bank, Goldman Sachs, HSBC, Morgan Stanley, Royal Bank of Scotland, UBS, Wells Fargo, Credit Agricole, and Societe Generale.
Hang 'em, baby. Hang 'em all. String 'em up. Beat 'em. Hang 'em. That's what you do with terrorists. Or defrost them and throw them in the ocean. All right, Stacey Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Don't go away. Much more coming your way, so stay right there.
Millions died here, and millions looked forward to be helped and saved. The pain and sufferings will never be forgotten, as well as the joy of liberation. Europe, spring of 1945, on RT.
20 years ago, the largest country in the world disintegrated. What had been one became many, and each began a journey. Where did it take them?
More news today. Violence has once again flared up.
These are the images the world has been seeing from the streets of Canada.
Giant corporations rule the day.
Hi, welcome back to the Keiser Report. I'm Max Keiser. Time now to go to Athens, Greece, and talk with Dr. Kyriakos Tobras, who is suing Goldman Sachs, J.P. Morgan, and others for their role in the financial assassination of Greece. Dr. Tobras, welcome to the Keiser Report.
Hi, Max. How are you?
Dr. Tobras, you are suing not only J.P. Morgan and Goldman Sachs, but you're suing the entire financial kit and caboodle, even the intermediaries that deal with these fraudulent securities, the broker-dealers, the derivative traders. You're going after the whole spectrum of fraud. Is that not correct?
This is a lawsuit against all people who are identified as responsible as speculators on the Greek government debt manipulation. This is a lawsuit against all people that they are identified as officers, managers, etc., of all investment banks involved in the scam of the Greek government crisis, on the Greek government debt crisis. That means investment banks, hedge funds, traders of CDS, naked short sellers of Greek government bonds, and also it is including the rating agencies who help them with the fake rating reports that they issued on the Greek economy.
You know, looking back at past scandals like, Nick Leeson and the Barings Bank collapse, you know, these brokers have always used kind of the same technique by hiding all of their speculative debts off the balance sheet until suddenly they're discovered. And in this case, of course, you've got the compliance with the rating agencies, Moody's and S&P. You've got money managers involved. You've got bankers involved. I mean, is there a case here for racketeering? Go after this for under racketeering law.
This is exactly, as you said, financial racket. This is an organized criminal plan with the intent to default the Greek economy in order to speculate on the CDS that they issued on the Greek government bonds.
This sounds a lot like the subprime crisis in America, where banks like Goldman Sachs were willing to take a loss on the bonds because they made 2 or 3 times that amount on their credit default swap, quote-unquote, insurance products. Is it like that?
It is exactly what you said. As in the United States crisis in 2008, they issued CDS on the CDOs issued on the United States mortgages. The same thing happened here. They issued CDS on the Greek government bonds, and they're creating the same crisis, the same effect, the same manipulation on the market, and there is the same results. As, for example, in the United States, the Lehman Brothers were collapsed after that. Even here, it's happening exactly the same. The Greek bonds market collapsed because of the CDS issued on the Greek government bonds.
Yes, we're familiar now with how the hedge funds and the banks get together and they collude and they engage in market manipulation and insider trading to collapse economies, to collapse countries. And on this front with Greece, you've got John Paulson, right? He was in the country recently with Goldman Sachs colluding to collapse the economy, correct?
Not recently, just 1.5 years ago, he was here with other fund managers, together with the Goldman Sachs and with all the other international speculators. They were here in Athens. They organized how to collapse Greek government debt, and together they issued this CDS. They are managing, they are trading them, and they organize all the Greek government debt collapse.
Dr. Tabras, my understanding is that the Greek constitution says very clearly that in the case of debts owed abroad, if to pay those debts it causes hardship on the people, that there is no obligation to pay those debts, as codified by the Greek constitution. These austerity measures, therefore, are by definition hardship on the people, and by definition, constitutionally, there's no obligation to pay these debts. So why is the Greek government so willing to break the law?
Look, Constitution is not speaking exactly about government debt, but Constitution is speaking about public interest. That means whatever is against Greek citizens, against Greek wealth, against Greek state, all that it is unconstitutional. And Constitution says, yes, you don't have to do that. I agree with that. It's not speaking exactly about government debt, but it's speaking about public interest. That means the same. Now, on your question, why government did differently? Because governments here in Greece for so many years, more than 30 years, are slaves of the debt because they make business on the debts, all the governments here after 1974. So they're doing what they order them to do. They cannot decide it by themselves.
Looking at your lawsuit here, Dr. Tabras, it's a criminal lawsuit, not a civil lawsuit, so you get to name names, correct?
Yes, this is a criminal suit. That means this is not against corporations. It is against physical persons who were involved as managers, CEOs, traders, etc., who in any way they got involved in this scam, in this financial scam that is called Greek government debt crisis.
So in other words, if I'm a trader of derivatives, HSBC, Barclays, Morgan, JP Morgan, connected to the fraudulent debts that are being applied toward Greece, my name as even a trader, a derivative trader, could be in the suit.
Yes, and the prosecutor will find how you trade, what procedure you follow, how you sold this CDS. If you know when you sell a CDS contract, if you have the knowledge that it is naked or not naked, you understand? All of these particular circumstances are creating the crime. So prosecutor who is in charge of this file, he will make decision who will be the persons who will be indicted as responsibles or not.
Yes, and the way you're going after this also, right? You're applying the way justice departments have gone after rackets and the mafia in the past. They find a low-level thug in the chain, and they go after him and get him to squeal, and then work their way up the food chain toward the big capo de capo, like a Lloyd Blankfein or Jamie Dimon, correct?
Yes, the approach is to kick the organization, know who is beside the organization. It will be the justice to discover that. But we offer them a lot of elements, a lot of proof material. They have everything to proceed, to make the names, to start calling people, to talk. And for them it will be easy to arrive to the end of this vicious circle of, let's say, a vicious circle of the Greek crisis.
Okay, so you mentioned proof. What form does the proof take?
Okay, the forms of the proof are very easy to understand for somebody who has at least an elementary knowledge of what are the markets and what is the criminal law here in Greece. For example, when you trade in the international market as a prime dealer of the government bonds of the Greek state, in the same time, you cannot sell CDS against the government bonds. If you do one game, you cannot do also the opposite. So this is against the interest of your customers, and your customer in this moment is Greek state because you are trader of its government bonds. So when you sell the bonds of your customer that is called Greek state, in the same moment, you cannot sell your customer bankruptcy to some other customer.
This sounds familiar. You know, the Congress in the United States is calling back to testify in front of Congress as a witness Lloyd Blankfein, the CEO of Goldman Sachs. They believe he committed perjury when he first appeared, talking about the role of Goldman Sachs in selling securities ahead of their customers and profiting from double dealing to their customers, engaging in the kinds of fraudulent behavior that you're describing right here. They want him to dig down a little deeper into his memory banks to see if he can't dredge up some of the more of the facts, the case. But could Lloyd Blankfein, in fact, could you call Lloyd Blankfein as a witness as part of your case? It sounds like he's an expert witness in fraudulent double dealing. Maybe he'd make an excellent witness.
Look, it's exactly the same. The double game that they played in the USA some years ago, they are repeating the same game here. You know, now they have the formula. They know how to do it. They do the same game in the United States in 2008, and now they are doing exactly the same here. So, if Blankfein will be called here in Greece, but not only him, either other managers of the Goldman Sachs or other investment banks involved in this game, this is a decision of the prosecutor. It's not our decision. I think they could call them. They have all the elements to call them here, at least to answer to some simple questions.
Anytime you're talking about these European bond markets, of course, Germany's name comes up because they're a main focus point on all the bond dealings in Europe. And, of course, in Germany, the biggest bank is Deutsche Bank. So is it possible that they also are complicit in the racketeering, the financial terrorism, the financial assassinations that you see plaguing your country of Greece?
Look, Deutsche Bank, even here in Greece, it is one of the prime dealers of the Greek government bonds market. It is like Goldman Sachs or the other prime dealers who are working in this market from so many years. But believe me, people are speaking about losses that Deutsche Bank would suffer if Greece will default. But believe me, the first interest of Germany today, it is a Greek default. That's why in the last month you will hear a lot of German voices suggesting to the Greek government to go to a default admission, to a default declaration, official default declaration, because for them it's very important that euro is getting cheaper against dollar. Today, euro it's 145, 148, and with the euro at that prices, Germans cannot export. Consider that German economy, it is a 50% exporting GDP, a 50% exporting economy. And for them, with the euro at 148, it is very, very difficult to compete to the world market. So they prefer to have a lower priced euro to be competitive against Germans or Chinese, etc. So for them, the interest of a Greek collapse is much higher than the losses that Deutsche Bank or other German banks will suffer if default will really happen in the Greek market.
Yeah, so looking at this cast of characters, do you see these folks banding together with a blank fine, targeting Spain possibly next as a way to talk down the euro to help Germany?
I don't think that Lloyd Blackfein or other American institutions have the same interest with the Germans. I think that in this moment we have one, let's say, financial war between US dollar and euro. In this war, in this financial war, we have two different fronts. One is German and the other is American. So they play two different games. The question is that in this moment, the problem in Greece is that the Greek country is not playing any game to the international market. We are just following the games who others are playing. So for me, my opinion regarding the strong euro, it is that it's not depending on other factors and could never change in the next short period, because the real problem is that American economy is deeply sick, has very, very huge financial problems, and even if all European countries will collapse, again, euro against dollar will be more than 130, 140, so they could never reach that.
Okay, Dr. Tabras, thanks so much for being on the Keiser Report.
Thank you very much, Max. Bye.
And that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I want to thank my guest, Dr. Tabras. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.